In this episode, I speak to Sean Kiernan, CEO of Greengage, a brokerage offering accounts, lending, and bespoke digital solutions. Think of them as the shop window for all things financial in crypto. I hope you enjoy. Sean, welcome.
Thank you, Matt.
Let's get straight into this. In a nutshell, tell us what Greengage does.
Greengage is a fintech platform. Very simply, we're offering accounts and lending, but through partners. So for our accounts business, we use banking as a service partners, multiple. And for our lending, we use balance sheet partners, and we act as an aggregator, really, to help our clients discover the best rates and best terms that fit their needs.
So you're the sort of shop front window.
Bingo. Very simply, we're an introducing broker, but we get to know our clients and have relationships.
And who are the people who normally are seeking out your services?
Generally, we're focused on the crypto space. So a lot of our clients are crypto companies, family offices, SMEs with some connection to the industry. What we help them to do is basically get access to financial services that they might not otherwise get through direct relationships with the high street banks.
And I suppose that's the key bit, because, and I'll come on to this later, but whenever I've had over the years inquiries of people who can't get banked for whatever reason, the go-to name is always Greengage, which I assume is a good thing for you.
Well, it's very generous. I think we've been at it for a few years, and we've learned that we need multiple banking as a service partners to guarantee continuity of service. I think we've realized that having one license or one regulated entity to work with is a point of risk. And for our clients, we can open multiple accounts.
Yeah.
And it's not just a crypto problem. Like there's a lot of industries that struggle with the debanking theme.
I'll get to the debanking.
Yes.
I do remember there was a colleague of mine a couple of law firms ago who were trying to set up for his client a cannabis company. And I think years ago, I was like, oh, it's a bit Greengage. Anyway, what have you spotted as the gap in the market here that banks, service providers haven't filled that you are?
I think it's an understandable gap. In terms of regulation, it's very difficult for a money laundering reporting officer to take risk. They gold plate what they receive because their head's on the block if they approve a company that's off-piste. And for us, it's the other way around. Like we love getting to know innovative businesses that are doing things that haven't been done before, because for us, they're sticky clients and they're interesting clients. So for the model that we have, which is dedicated relationship managers, understanding how the client ticks, we're doing something that is the exact opposite of the trend of massification, ticking boxes. A lot of banks have very clear protocols that they just say, no, this isn't going to be a sector that we touch. And those are the sectors we like.
So I guess the point is it's infinitely more personal. Instead of, as you say, tick box is a matter of keeping an arm's length, it's a very personal service. And the answer may well be, well, yes, traditionally banks won't bank these kind of companies, but because we know you and we have a relationship with you, we're willing to take that risk.
And crypto specifically, we really like because it's very traceable. You can see things on the coin forensics apps that actually give you color that you don't get in other industries.
Yeah, and I suppose if money comes out of North Korea, you're likely to know about it.
One hopes, yes.
One hopes, exactly. Yeah. So who are your clients and why do you think they use you as opposed to anyone else?
So I think there's definitely a space for multiple opportunities to serve these types of clients. Some people go at this with a single license and they say, come to us, we'll do everything for you. And that works for some people. But for the moment where there's a friction, we liked our model where if there is a friction, which almost happens inevitably, we have the immediate option of, if we have already the KYC pack, the relationship and the data, we can get them to open a new swim lane. Basically, we call it effectively a new banking as a service partner. So that they can make sure that if there is that moment where there's not the capacity to make a payment or they're limited in the size of payments they can make, as long as they're clean, we think they should be able to move their own money.
And who takes that risk? Because surely if you're the shop front and it's a crypto business, but then the provider behind you doesn't like that, how does that work?
Well, our job is to navigate the waters with the client. So if we understand who the client is, we also know the risk appetites of the underlying banking as a service firms or their respective service offerings. So if, for example, somebody needs a card, we know that one can offer a card, but maybe another banking as a service provider won't. Or maybe there's a certain currency pair or mix or a focus on FX rates. Our job is to be the voice of the client and be, as I say, an introducing broker. So we know exactly what they want, and hopefully if we can place them, we earn our keep.
So I guess it's a matter of, and I always do this, I try and summarize for my own mind, so you'll tell me if I'm right or wrong, but it's a matter of you're holding the client's hand, as you say, you're brokering these deals, whoever they may be. You say, give me a week and I'll come back with this, and you just go to market, you figure out what the solution is.
Yeah, and for us, it's a continuing relationship, and that's the difference. So sometimes you can just say, okay, here's a bank over there, they can help you out, and behind the scenes, you're going to get a trail fee, inevitably, as well, because that's how you earn your keep. For us, it's how do we help our clients to have an ongoing suite of relationships? Because we've noticed as well in this space, there's almost like a cycle of service. Some firms can be amazing for a few years, and then maybe there's a change in staff, or maybe there's an episode that they've had where they have to tighten certain screws, or maybe they've loosened other screws. And then our job is to say, okay, with the client relationship we've maintained, how do we keep them in good keep and good standing? So that means then we take an assessment with them, maybe open another account or accounts, or even close the initial account.
And there may be other providers, as you say, that come over the years. People get picked up or not, new businesses start, and you're always looking for the best people.
Yeah, and that's our value add. Like we keep a tight handle on the market. We love to have more direct integrations. So the vision would be ultimately having a single app where behind the scenes there's lots of kind of immediate connectivity. But for now, we're kind of finding our feet and still having a good progress, but we're not there yet fully.
So what has this all got to do with crypto? If you can break it down a little bit more granularly for us.
So first, there's two real angles for the crypto space that we're really interested in. The first is as a client segment, and we think they deserve as good a treatment as any. So we help them to do the things that they can do better than we can. I mean, it's the picks and shovels, as I mentioned, types of how do they get to move their own money around if they need a loan. Why don't they get loans against their assets or other kind of revenue-based financing type things, just as any other sector? The other bit is where we're going as a firm. So we have an accounts vertical and a lending, B2B lending vertical. Yield is our new kind of North Star. And this new world of digital private credit after stablecoins is very exciting. And from our perspective, because we know really well how to get loans against, say, Bitcoin into stables at competitive rates, once we have those stables, we can do a carry trade and lend them out into the real world digital private credit stuff like invoice financing, trade finance. And so that's when we start to look at tokenization as a broad theme. Once we have the stables, and that means we're able to kind of natively participate for the first time, really.
So you're describing a way that tokenization is actually useful rather than the last couple of years where people have been pondering how on earth they find value.
Yeah, and thankfully, stablecoins are the killer app in this. Like now we have digital dollars, and I'm going to say dollars specifically because that's what it is. But there's lots of businesses looking for debt funding, and they're not getting it from the banks post-crisis in the same way, hence the rise of private credit broadly, the kind of 3 trillion asset class.
And why are people not doing it directly? Because I've had several inquiries from potential clients saying that they want us to, as a law firm, they want us to look at their terms of business or whatever it is. But what they do is they're the ones who loan against your Bitcoin or loan against your crypto, whatever it is. I assume they're the people that you're talking to. Again, you're the broker. But why would people not go directly?
Yeah, and by all means, like I think what we add is whole of market access. So if somebody has an offering to say have some Bitcoin and get a loan against it, by all means, like scan the market, get yourself aware of what the options are. But what we bring to the table is probably names that you wouldn't have heard of.
More institutional, maybe. More
institutional, perhaps, but family offices, credit funds, as well as crypto names. Crypto names you can Google and you'll find kind of, and they're good. I mean, I'm not suggesting that like it's not good to have more diversity. But our value add, again, is just like with the accounts, if somebody comes to us and they say, okay, what are the options available to me? We can give them, I think, better than anyone, from the repo end of the market, including rehypothecation, all the way to the escrow end of the market, cold storage, tripartite custody. And we have a loan calculator for people to play around with these.
I did see that on your website, and I played around with it. I thought, this isn't for me. Let me just stick to law, not the numbers.
Oh, it's great. But it's just a way for people to understand what their options are. And if they find something that they haven't found directly through us, and I would hope that they would, we get a success fee.
Is it a matter then that if anybody wants to do anything financial with crypto and they just don't know what to do, how to do it, they just go to you and you guys figure it out?
the Sherpa role. I mean, that's kind of the in a way that's where we've carved out our niche.
Yeah.
So,
Okay. That's just a way for me to think about it. You know, there are certain companies I know, if there's some sort of consultancy that's non-financial, I'll go to a certain place. But I just want people to understand that if it's a financial thing and they have questions and they want to find a solution and they've got nowhere to start, that's your value add.
Yeah. And we also like some of the more sophisticated clients because it makes us sharpen our pencils and but there's also bigger deals then. So we like both sides.
Of course, yeah. And your website, I saw, has a Greengage ethos, which I quite liked, which includes two things. I think there was a list of 6 or 7 items. 2 of them I really liked. Follow a clear moral code. And the second one I liked was maintain the highest of compliance, transparency, and security. And my question to you is, surely all financial services should be following those 2 rules of engagement. And you may say...
Again, one would hope. Yeah. And here I think there's a difference between principles-based versus kind of systematic approaches to understanding clients and relating to and behaving with clients in an appropriate way. Like for us, it's part of our code DNA. We're not regulated. We don't need to be as a fintech in our current operating model where we work with regulated banking as a service partners. They take that.
Yeah, of course, they take that burden.
And the lenders equally on our lending platform do the same. So for us, it's about a means of just making it very clear that while we're not regulated and we don't have the kind of all the codes of behavior that kind of you have to imbue, we're doing this from the essence of what we bring to the table.
And as you say, all the parties that you're introducing to are regulated, do have all those checks and balances. And
yeah, well, where needed. And for us, it's reputational risk if not only they don't have these things, but also if they behave inappropriately themselves. So we're really proud that on our lending platform, for example, none of the balance sheet partners have gone bust. And in this
that's
world,
a big thing in
this world of crypto, and this has been years of operating. Like we've been careful not to deal with certain firms that might have been very attractive at the time, offering good rates. But we just thought, okay, even if our clients can access them directly, good luck to them. We've also to date steered clear of DeFi on the platform. Again, we don't think we add any value, so again, clients can discover that themselves.
Well, I suppose the whole point is there's no human interaction; it's just automatic. Right?
Yeah,
that's the idea of it.
Obviously, we like the technology, but we focused on the lending side more on the off-chain because our clients like to have counterparties that they can, to be frank, sue.
Yeah, that's the big part of it, isn't it? It's like there's got to be some accountability somewhere. And I suppose if your business is around dealing with human beings, that's the value add. Then why would you use DeFi?
I think DeFi is great in terms of I'm going to call it the plumbing. Like the efficiency you achieve. But I think there's a nice, healthy combination of using the DeFi in the back end so that the front end can be served by maybe regulated actors or people that have their own capital. Because the real risk with DeFi is, as we've seen with a few of the hacks recently, like, thankfully they've been made good to a large extent, but they won't always be able to be made good.
Well, and if something goes wrong, there is nobody to necessarily write to seek recourse for.
Point a finger at. No, this is where you kick in.
Let's not do some shameless plugs for me. Let's move on. So try to describe to people, and I think at least I have one listener, which is my dad, who always tells me, thank you for breaking these things down for me. So if you could think about my dad listening, what is the difference between a regulated payment service provider and electronic money institutions?
So e-money is where we focus with our banking as a service partners. We've got only one bank, full bank, that we work with. And the reason we like them is they can hold money. So it's not just that they can make payments and move money around, but the payment service providers can't hold money. They can move money. And from the perspective of what our clients are looking for, they want essentially, I'm kind of loath to call it this, but a banking service. And the word bank is loaded, like we a slap on the wrist if you say that. But the clear distinction between an e-money provider and a bank is that the bank can take deposits, use those deposits and fractional reserve lending to pay interest for their lending activities in the background. E-money providers don't. So those monies are ring-fenced. They cannot be used for balance sheet activities. And in a way, and again, I'm kind of loath to say this as well, but like they're almost safer because there's no need for deposit protection insurance if the funds are ring-fenced and held in segregated accounts.
Is there a situation where they should be, but they aren't?
I think, there could be some risks if in a wind-down scenario, the worst case, say, Revolut, before it became a bank, was one of the most famous e-money firms around. And if they had to, from some legal case or make a big settlement, like if they had to wind down, there might be some frictional costs that could eat into the client accounts. But by and large, it would be nearly 100% back to clients. And that for us is kind of the theme of narrow banking almost. Like you don't put the client monies that they're using for payments at risk. You keep those safe.
Yes, and lots of law firms could probably learn that as well. But that's a whole different topic.
Yeah.
As to the sort of user experience of the Greengage, do people open an account with you, or are you the broker and they open an account with a third party? How does it work?
Yeah, so it's very clearly communicated that they're not opening an account with us.
Okay.
So this is the regulated banking as a service partner. It might be white labeled Greengage with kind of our branding logo, our client service, but it's clearly kind of not even just in the fine print, like
in big print, bold,
big print, like this is an
pointing.
account from XYZ, and our job is to make sure that is clearly understood by the client. Because if, for God's sake, like something had happened, we need to work with the client to find redress. They can't look to us because we don't have their money.
I think the key word here is brokerage. It just is as simple as that.
Yeah.
Now, if I want to, and you can, as you said earlier, you can apply for a loan via Greengage,
Yes.
at Greengage,
Yeah.
keywords there. How does that work, and what makes you stand out from other people who are doing that sort of stuff?
So the crypto-backed loans is where we cut our teeth, and that is very simply like a discovery process. So somebody would come to us, say, I've got X amount of Bitcoin, for example, and then we would have a quick chat with them to say, here are the options available to you. What are you looking to achieve? If they have something that fits what we've got, we introduce. So it's very simple introducing broker activity. Since we've looked at this yield protocol as a new thing, like we've opened up a whole new world of real world businesses looking to borrow. And we've got at least one, but we're hoping to get a few really interesting buy-side mandates with balance sheet partners that are looking to deploy into short duration, high yield private credit. So some verticals there are like SME invoice lending or trade finance, where crypto money, that is, as I call it, the Bitcoin carry trade. If you're long Bitcoin, which is a non-yield bearing asset, and you can borrow against it into stablecoins, as long as you're posting those stablecoins into things that pay you more than the cost of the loan against Bitcoin, you're making a spread.
You're making money. You're doing well. Yeah.
You're making a yield. And so we've got a few partners that are long crypto. It doesn't need to be Bitcoin. It could be altcoins. We have some discussions with the foundations of altcoins where if they can get loans that are not rehypothecated, so there's no downside risk that the lender might sell that token, that means that they're able to get some liquidity against their treasury positions, and ideally post that liquidity back in stablecoins into projects being built on that respective blockchain. So say it's one of the altcoins, they want to increase their TVL, total value locked. We can help then bring interesting businesses looking to borrow to these chains. Currently, we do this through partners and only in stablecoins.
Well, the question I was going to ask, and you sort of semi-answered it by saying stablecoins, is to what extent is this problematic where the coins or the tokens being used as collateral are really volatile? That's tricky.
Yeah, it is tricky, but the lending here is actually the unlock, interestingly. So Bitcoin is actually less volatile than it used to be, and some of the big tech stocks in the US are more volatile, perhaps unsurprisingly.
Yeah, that's fair.
And as a means of collateral, like I think Bitcoin is probably one of the best, if not the best, types of collateral. It's super liquid. It trades 24/7, and it's big. So there's always a depth of market as a lender to look against this asset, where not only can you use it if you need it in a stress scenario to sell, but you can also hedge it. There's contracts in the market that kind of can protect from stress scenarios. If there's a DeFi lender, like there's no way to do this kind of massaging, if you will, to give time. Like it's an automatic sell if the collateral drops below a certain value. And the types of lenders we work with are more sophisticated. They can look at maybe non-recourse features of loans. They can give time through either setting margin call thresholds or maybe different types of mechanics to give a capacity for the borrower to make up their mind if they want to top it up. And again, the LTV then dictates, like, if you're borrowing at 50% against Bitcoin, there's not that much precedent for Bitcoin to drop 50% in like a matter of a week.
Yeah.
You have the capacity to take maybe shorter loans, longer loans. There's a whole host of variables.
Well, I suppose the mechanics are all built in, aren't they? That's the point, is that there are perfectly sensible, smart people creating these contracts to protect against that position.
And sometimes the loans can even be a hedge. I mean, if you're borrowing against say, Bitcoin in a non-recourse loan, and the LTV, or the loan to value, is, say, 70%. And so your asset initially is probably worth $1 million, say, for simplicity's sake. You borrowed $700,000 in dollars. If Bitcoin drops to 500,000, you probably don't want to make the margin call. You probably want to keep your $700,000 of dollars because that's the non-recourse feature. So it's like an embedded put to protect against the downside risk. So volatility, yes, exists, but sometimes loans help you to manage that.
And to what extent have you found that people who want to use their crypto assets as collateral are checked, are you work back on chain and you see that they're from somewhere that may be nefarious? Has that happened to you yet?
More than once, yeah.
More than once.
Yeah, and what we do is, I call it the sniff test. So our job is to make sure what we pass on to a lender is robust. And
so you do the test rather than
Well, they definitely do the test, but we do the sniff test. So
good for you.
I do not want to pass something onwards that kind of damages our reputation, as we've discussed, kind of the moral code.
It's all from Mount Gox. It's all from Quantum. You don't want that.
Yeah, and so we do KYC, although we don't have to. But we're not asking for the lenders to rely on ours. We're doing the first check. If we don't see any red flags, we then pass on, and they do their own full onboarding with Coin Forensics.
Because we have to do that as a law firm as well. Part of the thing that we do is where there's loans or there is real estate, we have to check if people want to use those to buy, say, real estate. We have to check the provenance of those funds. Yeah. And a lot of the time, obviously, we have to go beyond just the sniff test. But some of the stories that we have of how people have got their assets is just bizarre. Yeah. And we have to figure out what we're comfortable with and what we're not. So it's great that you're doing that, even though you don't, in theory, have to do that.
I mean, I think we do, but we're not required to do it under a regulatory perimeter. Yeah.
And I saw on your website that there are other consultancy services as well as generally what you're doing. Yeah. Tell me about Call Shield app. I put that down. There's obviously some story to it.
Well, so we built on Salesforce, our core system, like a basic CRM, but have embedded and embellished it quite a bit. And we're a bit neurotic, perhaps, as a house. And so we checked against the Do Not Call database, because we're not making cold calls really, but even though if somebody doesn't want to be called on their mobile, like, we're not going to do it. And so we built a little widget to say, do not call. And we realized this could be a product other people want. And it's starting to sell. Like, so we're launching it not just on Salesforce, but on HubSpot and Zoho. And we're now getting, I think, a more appropriate app called, perhaps unsurprisingly, Wallet Shield.
Makes sense.
Where we've got 2 Coin Forensics providers that we've done a really user-friendly red, amber, green indicator. You guys are specialists in this space, so like you have your own Coin Forensics tools, I'm sure. But if you're an ad hoc user, say you're a real estate house, kind of that's looking to one potential buyer in crypto a year, you want that kind of really clean and probably a tool that doesn't make it too complicated for you to get. And if you get the red, yes, kick into touch, use the deep dive. But if you get a green from the Coin Forensics kind of indicators that we have, which are 2 robust providers, then we can offer an account to help you make sure that those proceeds aren't going to get frozen either from the high street bank. And there's a whole suite of good OTC firms. So like we're trying to offer one package solution, and that's the consultancy aspect of what we offer.
I suppose it's just finding new angles of how to provide better consulting services, no matter what it is, through loans or whether it's this or whatever it is. Yeah. And I think I saw, but I'm going to ask you this question. Do you offer treasury management, or is that of interest at all?
I mean, yes, in principle, that's the yield thing to a certain extent. So if people are long a position, in my view, they should always sweat it and hedge it. And that's kind of banking 101. And it's amazing to me a lot of people do not. So we're looking to a certain extent to do this ourselves. So right now, as you clocked, kind of pure introducing broker, with target fundraisers and maybe even a listing, we'll jump up into being a principal. So some of the monies we can raise can act as like a grease for the wheel to have our own capital at risk. And one of the big prizes we see are the DATs, or the treasury companies. That
remember, my dad is listening. A DAT
is a digital asset treasury, kind of a listed company that's holding typically Bitcoin, but it could be other coins. And this is now a thing in the market. So about 5% of all Bitcoin is held in public companies, which is fascinating. Strategy is obviously the big one, but there's a lot of them. And quite a few of them are not activating yield on their holdings. They're sitting on them in cold storage.
Hoping that it increases in value.
Increases in value. And in a way, treasury management on that is exactly what I think they should be doing. And I'm hoping that as we grow into a yield vertical, we can help to help bring yield to them as well.
Well, if you know Sailor or any of these other guys, it's an easy sell, isn't it? Maybe these guys are listening to this. I don't know.
Yeah. Well, there's different strategies for them. Yeah.
Moving on to sort of some slightly larger topics, there has been some discussion about London, where we are as a financial hub and whether we're doing the right thing. People have their own views about this as to whether we've waited, and we've got some new law coming in next year, the statutory instrument updating the FSMA. Some people are more optimistic in saying that we've actually done a really good job of not knee-jerk reacting to things and taking our time. Others think that we've sort of lost something by not getting involved. I don't know whether you're optimistic about London, the UK as a whole for digital assets, bearing in mind we are changing government.
Yeah, I mean, the substrate's great. And we have big pool of talent. There's the language, the legal code. And I have to say specifically the legal side is what makes London so flexible and kind of innovative. Pools of money. I think there are some dangers. I mean, we really don't have any unicorns in this space that are homegrown here.
Revolut?
In the crypto space specifically.
They may argue
that they are a crypto firm.
Well, because, when I was with Revolut before I got debanked by them, you can tell I'm very calm about it. No animosity towards them when they became a bank. They allowed you to be able to trade in crypto as well as fiat. So they may argue that they are a crypto unicorn. I don't know.
Well, and good luck to them if they do. And there's probably a few market makers here that could say that they are.
Yeah.
It's disproportionately an American story. And there's even a few on the continent. And if we look at fintech, which I think Revolut's probably fitting more into better as a theme, the UK is punching well above its weight. So we're overweight fintech, great, but we're underweight definitely crypto. And I think there's a few policy decisions that we could have done differently in the past. We are where we are. And so the job now is to try to attract, and I think the government here is doing kind of mostly the right things. The traditional space into tokenization and kind of all these themes about efficiency and digitization, like that's not a bad way of approaching it. But I would like there to be more emphasis on the secondary objectives that have been set for the regulators around innovation and competition. And my fear is the Mika style kind of approach to kill 80% of even currently regulated businesses would not be a great look for the UK. We should be embracing the small guys as well as the big.
But you're saying that we are punching above our weight in terms of fintech. I wonder whether it's not necessarily fintech, it's just financial services, because we're supposed to be the financial services hub, maybe the US to some extent as well.
Yeah.
But if we recontextualize it like that, maybe we're punching below our weight. I don't know.
I think there could be an argument to say that as well, but I'd like to think in the positive that the UK has got a lot of new businesses that now are expanding globally and they're well funded. And the UK is always the top in Europe for fintech funding, but crypto, I think we could be doing better.
I think, and I'm just thinking sort of aloud here in terms of crypto in Europe, it's normally France. I mean, apart from all the poor people in Paris who lost a finger because they have these huge ledger accounts, but to that extent, people think ledger, they think Paris, they think France. That's a big tech innovation in crypto that's happened over there and not here. And maybe we're missing that. Maybe we haven't got that here.
And that's fair enough. The French are allowed to have their own champions occasionally.
Yeah, absolutely.
I would like to see a bit more coherent messaging. I think a lot of the dynamics around our industry are around momentum. And we've seen, the UAE has been amazing at this, just saying like we're open for business, and the regulators actually give you their WhatsApp to talk. Like these types of engagements are not.
That's very impressive.
Yeah, you couldn't imagine that here, and not necessarily that is going to be something that is untoward. Like you're not getting the kind of the emotional kind of connection there. You're getting just responsiveness. And I think that kind of thing we can learn as well from people that have effectively copy pasted FCA code.
Yeah, there's a lot of that. That's a hard conversation for another day. What can you tell us about your listing? Because it is all very exciting. I don't know whether you can tell us too much, but Greengage is going through this process.
So we did an intention to float, so I could talk to that. But
Okay.
we've been trading for a few years. We're probably a bit on the smaller side to list. Generally, it's kind of the unicorns that would list. But I'm really keen to see if we can bring this trade around, particularly Bitcoin yield, to the market in a listed and audited vehicle. And the idea for that is, I mentioned the DATs before, the digital asset treasuries. Like if there's a way that they will start to embrace yield, it's if they can see other people doing it. So we wanted to show that we could do it with our own money, because we've been doing this for our clients, basically. And if we can do it, then that'll lower the barrier for them to say, we'll look at this.
Well, I suppose it's sort of leading by example in that respect, isn't it? It's being able to say, we've been helping third parties do this, let's do this ourselves. That makes sense to me. And very lastly, on a sort of more philosophical level, what's been the biggest sort of learning through the ups and downs of crypto, given that you have been there in England as a business operating in this space for a while?
Yeah, I mean, I think there's an element of stubbornness. Just keep the show.
Not success only. It's just I'm carrying on. I don't care.
I'd like to see. There is a core group of us as well that have been here through the ups and the downs, and I count you in that. I mean, we've been holding together despite the asset class moving up and down, and I think here I'm going to be a bit contentious and say, like, while I love the asset class and the idea of it being this kind of challenge to the traditional space and enfranchising groups of people that aren't necessarily typically in the markets, for me it's about the technology and the plumbing again. Like I think that long theme is taking longer than I would have hoped to unlock, but we're now seeing real names. I mean, JP Morgan's launching Bitcoin back loans. Like, if I had thought I would hear that 10 years ago.
Yeah, that's true.
And if we looked at this new world of private credit, which didn't exist like 20 years ago at the scale it does, and that's totally ripe for innovation. If we can achieve even a little bit of efficiency savings through being able to move money around more safely, securely, knowing what your counterparties have. So this delivery versus payment world, the DVP stuff, like if you don't need that anymore, like you know what you're dealing with because of the technology giving transparency. The stuff on top of that, if we can cut costs of lending even by like a couple bips, like that's a meaningful change to help businesses get more money to grow.
And I suppose in that sense, it means that people will be more enticed to join this journey because it's cheaper.
Yeah, and I think AI is a really interesting one. Like, you spoke to Treasury. If you think of the retail consumers that have a lot of their money just sitting in current accounts, paying no yield, like if you have a little agent kick in and start to move that money around, or the SMEs that are sitting on even bigger balances, like that kind of stuff is going to need to have some kind of digital back end when they do more advanced product. And I think the AI agents will themselves not be able to get bank accounts because it's hard enough for real world people or businesses to get bank accounts. They're going to need to have wallets for them to be able to interact with each other and pay for services. So like, I think there's going to be, again, a long tail, still worth hanging in there to see where the next steps take us.
Well, maybe that's the next point of action for Greengage.
AI agents?
Something like that.
You never know. And I think there'll always be a human interface with us because that's kind of our thing. But
Too right. Sean, thank you very much.
Thank you very much, man.